So hi everybody, this is Hustle Hub. I'm Giacomo, and today I'm with Manuel Blay. He runs the DowTheory.com. So he talks about the Dow Theory. So this is the first video, it's part of a series. So make sure to subscribe in order to see the whole series. And Manuel, please introduce yourself, tell us what you do, and then we'll get into the content of today.
Hi, good morning. Thanks for having me on your YouTube channel. I'm very happy to be here. Well, I am an outsider. That is the living proof that being an outsider, you can succeed in the market. So you don't need to work on Wall Street. By trade, I was a lawyer in the past, and well, I had the issue what to do with my savings. And of course, then I realized I had to learn how to trade, how to invest. And out of this quest, being a totally outsider, I was a lawyer. Little by little, I began learning, and well, you can always be a better investor. So this is a never-ending story. But of course, I think I know a little bit more now than 25 years ago, and I hope if I am alive in the next 30 years, I will be even better. So this is a little bit my background. I'm an outsider. I run a newsletter for my subscribers. So now I think, well, I've learned something.
Okay.
With experience, and well, happy to be here.
Okay. Let's get into the content of the day. Let's talk about the Dow theory and how it works.
Okay, so first, the disclaimer is good to know that it's just for informational purposes. So this is not intended to be investment advice of any kind. Readers or viewers of this video are aware of their personal circumstances, financial conditions. So it's just for informative purposes, but it's not any specific recommendation to buy or sell. So let's start with the basics. Okay, you are an investor, you have to invest your money. How to do it? This is the main question. When I was confronted with this issue, I realized there are two big families. There are those that say, okay, there is those that believe in fundamentals, which means look at the economy, interest rates, many things that can happen. There is war, how the war is going to affect, or there are the technical camp that says, look, I don't give a damn about the economy, the war, what happens around. I just look into price action. So if the price is going up, it's going up. So it means it's trending. And if it's going down, it's going down. So these are the two big prominent families when it comes to analyzing the markets. And I am quite eclectical. I am more on the side of technical analysis, of course, because it works, basically because it works. But sometimes, occasionally, you can mix a little bit of fundamentals with technicals. One thing is clear, I would never go against technicals. So if the trend is down, even if I have the best economic outlook or information, I would be very careful to go against the trend. As technical people say, the trend is your friend. So never go against a trend. Okay, so technical analysis is based on pure price action. But of course, within technical analysis, there is trend following, but there are also what is called mean reversion. So you can be a technical analyst, but you can also bet sometimes for mean reversion. Basically, as I will explain in one of the final chapters, there are occasions when you can be in technical analysis and bet for mean reversion, but most of the time, we are going to be trend followers, because most of the time, follow the trend, because the trend is your friend. But occasionally, within the framework of technical analysis, so ignoring economic news, sometimes it pays off to bet for mean reversion, also on a technical analysis basis. And okay, we are technical analysts, we are within the family of trend following, but of course there are many ways of doing trend following. You can do moving average, breakout systems, rate of change, and one of the tools to be a trend follower is the Dow theory. And this is what we are going to see in the next slides.